Hello, good morning.
Hello. Good
Good
morning, Ranga
morning.
sir. Good
Good
morning.
morning. It's my pleasure to welcome Mr. Sidharth Ranjan, a chartered accountant by profession and the CFO of one of the large private hospitals of Odisha. The focus of our conversation, Sidharth, is to understand inventory accounting. But before we get into it, I once again invite you and request you to briefly tell us about yourself.
Thank you, sir. I am Sidharth Ranjan. I graduated in the year 1999, sorry, 1993. Then I became a chartered accountant in 1999. By the time I had already joined PricewaterhouseCoopers, which was then it was Coopers and Lybrand in Maldives. After serving a year, I switched over to Ernst and Young, Colombo. There I served 2 years. In all these engagements, I was in audit and assurance division doing full scope audits. Then I came back to India. I had a brief dalliance with banking industry, IndusInd Bank. I was in the corporate credit division for a year. Then I was briefly there in Australia for a conglomerate of, I would say, entities, mostly actually with charitable nature. Then I came back. I have been into practice, income tax and assurance, all those things. And then I have also owned the hat of chief financial officer, financial controller for small to medium scale companies. Right now, I am the CFO of Kalinga Hospital Limited, which is a fast corporate hospital of Odisha.
Wonderful. That's great to know your wide experience and exposure. As I mentioned, the today we are only going to focus on one of the important accounting standards, that is Ind AS 2 or AS 2. But before we get into the AS 2 or Ind AS 2, in general, we want to know how important is inventory accounting for hospitals.
Yes, sir. I would also add that in the last 30 years of my experience with industry, including my training, I have been mostly into service sector. Just 1 year I was with a manufacturing company that's in the dairy sector. So inventory, generally we tend to feel that if we are in the service sector, perhaps inventory doesn't play much of a role, but it is not the case. In case of a hospital, which is broadly in the hospitality segment, inventory does play a role. I would give an objective example. Say
Sure.
the industry standard is around more than 22% EBITDA, but unfortunately ours is a legacy facility, legacy hospital. Our EBITDA is around 15%. So in that, slight movement in inventory, supposing consumption is higher, that actually wreaks havoc in our bottom line and everything. So inventory management, valuation, how we actually appropriately recognize the consumption of the inventory, like any other hospitality industry. For us, actually, it is a consumption. We serve our patients, our customers, and while to serve our customers, we consume medicines, consumables, which I will come in detail as we go forward.
Yeah.
So inventory does play an important role because we don't have a big margin. So that 2, 3, 4% that can turn. I can be more specific. Say we report a bottom line profit of say around 4 to 5 crore rupees.
Mhm.
Now, typical situation, perhaps I can tell that for the benefit of the audience. And we have two different software, like for billing and all, we have a HIS, hospital information management system. That's a very detailed software. Then for accounting, we are using right now Tally, but we are migrating to SAP. So
Mhm.
what has happened in the process in the last so many years is that now in our hospital management system we carry around 8 crores of inventory, but in Tally, which is based on actual inventory count and all those things, a very rigorous process, that is just around 3.5 crore. That
Oh,
difference can actually completely, now we have to really cleanse. Now that we are migrating from one HIS to another HIS, we are in the process of cleansing those extra 4 5 crore rupees. But
one.
looking at our bottom line, that can really play havoc and also has gives room for smoothening the bottom line. A very willy management can play around that and report different figures, completely fooling the investors.
That's great. But before we get into the nitty-gritty of the inventory, can you just throw light on what is inventory for a hospital? What is inventory?
Yes, I'll
Okay.
tell. Like, as accounting standard 2 requires inventory, like the exact language of the accounting standard is paragraph 3 that tells about tells inventories are assets A held for sale in the ordinary course of business. So
Yeah.
for us, those are medicines, but medicines are actually a very vast range. There is something called formulary. Formulary meaning no medicine number of medicines is very large right now. Actually we have 7,000 line items. It's a mind-boggling number, but I will not go into those specifics. Perhaps we will discuss some other time because it's more about
Yeah.
evaluation of inventories. So different types we in our hospital we have 4 different outlets for dispensing medicines. One is OPD pharmacy, IPD pharmacy, OT pharmacy, then central pharmacy. Then also we have crash trays, which hold some amount of inventory, so that immediately in the specific location, supposing we have different wards D1, D2, C1, C2, A3, like that, in those areas for a few beds, a small category of beds, we have a crash trolley. So
Okay.
that also has actually medicines. Then B, paragraph 3(1)(b) says in the inventories are those which are in the process of production or sale.
Mhm.
Means these are also inventories. Those inventories are for us consumables. Consumables actually play a very big role. Like say CSSD, Central Sterile Service Department, cleaning and sanitation of hospital is a very big, because many raw people do not understand infection control is the most important aspect of any hospital management, and that actually we use very expensive liquids, detergents, and infection control material. So those also play a big role. Then radiological investigations, we use reagents, we use different kind of films. Those are expensive and those need actually tight control. Similarly, pathological investigations also we consume reagents and sort of things, and the cartridges. Then in cath lab and other laboratories, we have peculiarities like there are actually probes. I can give you an example. Very recently, we have a probe for orthopedic surgeries, which can be used for 8 hours. We are actually in a bind how to actually price. Some surgeons said it can be used for 3%. And others said 8 hours we can do 4 5 surgeries also. Then finally we decided that we will split into 3, and because the cost was 24,000, we decided that we will recover 10,000 per patient. But immediately after that, the last week, the OT manager, she fired me a mail because in 2 surgeries they
Mm.
consumed 1 probe. But I stuck to my ground. I said, if you have decided that, we'll charge 10,000 rupees, because that is based on certain pre-decided. We did brainstorming. So for isolated incidents, just because actually we have seen that in 2 operations, the orthopedician consumed that probe, will not increase the price. We'll stick to that 10,000 rupees. But at the same time, also I wrote in the footnote that please advise us whether we should revise the price or not, because then our bottom line goes there. Then next is spares for critical equipment. Those also play a very big role, because some of our spares are very expensive. Very recently, one of our spare in cath lab went bonkers, and
Mm.
that would have cost close to 50 lakhs. But because that was covered under CMC, we got it free of cost. The next C, that same paragraph C, accounting standard AS2 says inventories are those which are in the form of materials or supplies to be consumed in the production process or in the rendering of service. Those for us are maintenance store items like wheels for beds. We have different kind, like maintenance store. Very recently, we are doing a stock take. In 6 hours, we could not complete. So many actually small items are we have there. Like so many things for repair, immediate repair. We keep those maintenance store. We will not go much into detail.
Yeah,
Then
but that tells us, the complexity of inventory management in hospitals. Am I right?
yes, sir. Yes, sir. If I can add 2 more
Yeah,
peculiarity of a
please.
healthcare industries, we have something called SUDs, single-use devices. Those are like when somebody comes for a cardiological procedure, use something called guided wear. That guided wear also can be used more than once. But then strict infection control protocol, sterilization protocol is to be followed. If properly management doesn't follow properly, what would happen is that people who are handling those SUDs, the namesake, those are called SUDs, but in many cases those can be used multiple number of times. So they are in actually, because those are very expensive. So there also we need to have a tighter control so that we optimize the return on our investment. And we work in a very regulated environment, sir. Like psychotropic dogs, even if those are expired, we can just like that, we can dump them. Regulators come, they certify, then only we can destroy them. Similar is the case with radioactive processes. They are atomic energy agency, they have a tight control so that actually safety protocols are followed, and that is how actually it is about. And all those items which are related to that also go with that.
Okay. Hello.
Yes, sir.
Yeah. So that further adds, the complexity to the inventory. So just bring it to the in line with the accounting. What do you think on a balance sheet? What percentage of total assets will be inventory? Of all these, whatever material types classification you have put, if I just say what percentage of total assets of a hospital of your company, keeping that in mind, what percentage of total assets will be inventory? Approximately.
Yes. So I'll give you a ballpark estimate. Like in our case, supposing our balance sheet side, asset side is say about 70 crores or thereabout. Inventory size is 3.5. So it is about 5%.
5%.
Why? Reason being, now the medical industry has really progressed leaps and bounds. Our equipments are very expensive, sir. So because our equipment are very expensive, and then we have regular land and building, all those things. That is why when we do a smart management of inventories, like say in case of stents and implants, which are very expensive, those generally we don't hold in our inventory. We consume them on consignment basis, so they don't sit on our balance sheet. So because we follow that kind of a method, our inventory ideally actually for a hospital inventory should be around 5%.
Okay. But still, because though another way, we can see that though it accounts for 5% of total assets, the inventory management is a very critical business activity for hospital. Am I right?
Yes, sir. Because that actually can completely turn the bottom line if we don't actually manage it properly.
That's true. And not only financial, but also has an operational effect, isn't it?
Absolutely.
Operational implication. For example, if a building is not doing well, is all right. But if the critical equipment is not there, critical tool is not there, then your operations get affected.
Absolutely. For example, oxygen. Oxygen is so critical. We maintain reserve stock, additional stock, so that there is no possibility that any patient requires oxygen we are not able to provide, which happened during COVID time for some other hospital. In our hospital, it didn't happen at all, because we ensure that there is a regular flow, and for that we have to maintain additional inventories.
That's true. Because you brought in oxygen, and because we are on the topic of inventory, so for generally hospitals bring the oxygen cylinders and store it, or they have an oxygen making plant within that company?
We can address that in 3 ways, sir. In our case, what has happened is that we don't have a oxygen generating plant, which we are planning to have. Right now, we have 2 sources, and both are actually happening parallelly. We bring medical oxygen in tankers. We have a big silo that is directly actually filled into that. But besides that, as a plan B, we also have so many, like 48 big canisters of oxygen, so that in case, and we have a complete different oxygen plant which monitors on a very regular basis, 24 hours somebody is manning that. So if there is the process is automated. If for any reason oxygen flow from that silo is getting hampered, automatically it changes to the other side when we have stacked all the cylinders, and we stack cylinder in 2-3 different places. one is reserve stock, then two different, like there are two lines. For some reason, if one line develops some kind of snack, automatically it switches to the other line. So we feel we have a more robust system to provide oxygen.
Okay, that's that. So inventory has two aspects, as you rightly mentioned. The accounting standard also talks about the physical quantity. The other one is a valuation. So you
Yes.
do physical verification quarterly, monthly, or what is your physical verification process of inventory?
Now, sir, because of technology, as a CFO, every day I receive an inventory count which runs into 35,000 lines. Sometimes I feel it is an information overload. And
Okay.
every month, sir, when we report our numbers, based on that, because that is again based on how users are actually putting the figures into the system, garbage in, garbage out. If they don't actually show certain actually items as consumption, to that extent, our reporting goes wrong. We do at least once inventory, physical inventory count once around 31st March. Then our plan is to actually do a continuous inventory, which more or less we do. Then I am intending to actually bring in a monthly count, which we have not yet implemented because it's a humongous task.
I can understand with so many items, line items. I can, but that brings us to the problem of valuation. For example, India suggests methods like FIFO, weighted average. Which method normally you use as in a hospital industry? Which method is preferred and you generally find it useful?
Sir, in our case, what has happened is that because of technology, because
Mhm.
exactly which lot was consumed, technology can say. So in our case, exactly the lot which was consumed, that goes as actually consumption. So it is specific identification. So that
Okay.
machine, and then now with SAP, we understand that now also we have, but we are not using much. We can exactly tell which batch of medicines or whatever actually is consumed for a particular patient on a particular day. We can actually tell, and exactly that cost, whatever was spent for that strip of medicine or that bottle of medication, that will be charged to cost.
Okay, okay. So you can identify the cost with the batch number and the item issued, then you do it, isn't it?
Yes, yes. Or
Okay.
otherwise, fast in, fast out.
Normally you follow first in for
Yes, yes.
that's and because with so many items, I don't know what is accounting standard saying. How do you deal with those inventory which are obsolete or not, in a good position to be used? What do you call them? Obsolete items or damaged items? How do you
Expired.
hand, how do
Yes.
you handle that?
In our industry, again, as I said, we have 7,000 line items, and every day new medicines are getting added and all those things. But our software, right now, the software which we are using, and we are able to change to another software, that shows, that has the facility about to expire. 30 days before actually it goes into expiry, it can tell us that this is going to expire. And we have arrangements with our suppliers, medicine suppliers, that before actually it expires, 30 days or 60 days, if we return them that, so they will actually accordingly give us the credit note. So we
Okay.
do that. In between, we lost a lot of money because we couldn't smartly handle some expired items, so that we lost. But now very smartly we return, based on the software. We identify which are the items which are going to expire, and we promptly return them. But in case of consumable, what happens? Generally it is difficult to return. Then automatically we book those as loss. Those are
Loss.
few because of smart management. Those are few. And any hospital which is not able to nimbly manage that side, they will hope
Then
severe cash flow management.
oh, that's one. And so because we are still on that valuation, India says that inventory should be valued at the cost or the NRV, whichever is lower. How do you handle this NRV for so many items?
So, supposing in case where there we do have actually items which are lying there for so many years that we have already scrapped those. So
Okay,
NRV is almost negligible. So,
okay.
we do follow that very meticulously. And once actually something, whatsoever may have been its cost, once it is no longer actually no longer which can that can be used for the intended purpose, we value those at scrap value.
Acha. So no, but let us say on your balance sheet, which you show inventory, so inventory is at cost then it is not compared with NRV for you.
It is automatically NRV because, sir, um, we have a margin. So, supposing I'll give an example. Supposing meropenem, which is a high-end antibiotics. Supposing on the bottle, on that vial, it is printed 5,000 rupees. We may have bought it at 3,000 rupees. So
Yeah.
we value it at 3,000 rupees because we can anyway, so long as it is that medicine, we can always actually charge the patients at 5,000 rupees, or in case of corporate patients, according to the discount that we have agreed upon with them. So it will always be actually above cost. If it is expired and it is lying in our inventory, then the valuation is zero, sir.
Okay. That brings us to the use of this cost information of the inventory. How do you fix the price for your service? Do determine the cost plus, or do you fix the price on the basis of the market?
Ideally, as you said, sir, we are in a very dynamic industry, competitive industry. We should do costing very rigorously, and accordingly we should price our services. Eight,
Yeah.
9 years back, I was also the CFO of Parhi Hospital. Then I did a rigorous, that is something called CSSD, where we generate our sterile consumables for our OTs. There actually we have another 27, 30, around 30 different kinds of consumables. We did a, and there we found out, actually we were amazed, because there we consume a lot of energy. It's not just gauze and all those things. We consume a lot of energy and very high end in disinfectants. So that was not getting factored. So we were charging much less to the patients, and that was actually loss. So as you have rightly said, sir, we should do, from time to time, we should do costing for our services. Of course, actually, it will have the element of medicine and consumables and all those things. Also, an element of depreciation, because we use very high-end machines, and also an element of energy. As I said, supposing we are using disinfected materials for that, so we should ideally do that costing and price accordingly. But I must admit, the skeleton in the cupboard is that I think many hospitals are now driven by competition. What they do is that they track the price chart. Our price chart is very detailed. It runs into more than 200 pages. So we take the price chart of our competitors. We see actually how we are positioned, and accordingly actually we price. I think that is not the optimal way of looking at things.
So you're more driven by price-based management rather than cost-based management.
Yes, sir. Market-driven, yes.
Okay, market. But internally, as a CFO, do you make an effort to find cost per patient or cost for department or cost, of the hospital? What is the narrative within your department?
Yes, sir. So that is a very reason why I 8 years back also I was driving for SAP. Now also I think I am now successful. We are going to implement SAP. The very reason is that now we want to really know what all, like because software can actually give us that what exactly what medicines have gone into treating that patient. So we want to know exactly what is our cost, and we understand SAP will give us all those things. I mean, existing software is capable, but there are some operational issues, so we are not getting exact cost. But yes, sir, we get to know. Supposing somebody dies, we decide that we will give discount. In that, we have a ballpark estimate that this is the cost that we have incurred. So if we let them go with this much of discount, or even if this much they are not paying, we are not having a cash loss. So cost does play a role in that.
Very important. That's right. Yeah, slightly away from inventory, but in general, because in a hospital, hospital is a service driven, So
Yes.
what do you think the main operating person, that is the doctor, are the doctors really concerned about the cost, or they're not bothered? Do you make an effort as a head of finance to bring to the notice about the financial aspects of a particular job to the doctor? Are the doctors interested in understanding?
Yes, sir. I can give you an example. There is a doctor, plastic surgeon. He operates and he works in a different other hospital, not in our hospital, because I have known. So drugs can be again categorized in three broad categories. One is research, meaning actually say high-end Pfizer, those multinational companies, Sanofi's and all. Then actually our own companies, Cipla, Ranvaxi, and all those people. Then generic drugs. So the cost widely varies. So now most hospital, what they are doing is that when we do business with government fixes the price of a particular procedure in that, because to do those things, to extend those treatments within those limits, now hospitals go to something called LPC, low paying category patients. Then because government also says people go for generic drugs. Between
Okay.
generic drugs and resource drugs, the price differential could be 100 times, sir.
Okay.
I can give you an example. Supposing, say, meropenem is a high-end antibiotics. Supposing Pfizer charges 5,000 rupees for that, but they will sell to the hospital also at 4,500 rupees. The
Hmm.
margin for hospital is only 500 rupees. But those actually, those have the best outcome. The next, supposing we have an Indian company, Cipla or Sun Pharmaceuticals, they would still print 5,000 on that vial, but they will supply that to the hospital at 2,000 rupees. So hospital would always love to actually keep patients that and charge 5,000 rupees, because that is the printed price, that is what they pay. But then at the lower end, there is called something generic. They can actually supply the same medicine, the same composition at 800-900 rupees, and they
Okay.
also put a price of around 2,000-3,000 rupees. So in this, the outcome does vary. That person had a very strong fight with the management, because without informing him, the management changed from research based, meaning actually very high end medicine, to a middle in between category. And we saw after 4 days, when he saw that the wounds were not healing, so he
Hmm.
went exactly checked what medicines they were giving. When he found out that the ointment he had prescribed had been changed, he
Hmm.
actually had a very big fight, because as the treating doctor, he is also concerned about the outcome. And
Oh,
now many unethical practices are also happening around that. We will not go into that, because
yeah,
that
that's
is
right.
out of scope.
Yeah, that's no, that makes sense, of course, yeah, that we are now captured most of the issues, but because you are a chartered accountant, also CFO now, I want to take you to the other side of the your profession. As an did you come across a situation where your auditors, you are a CFO, but your auditor putting an qualification on inventory, not necessarily for the present organization. What type of qualifications normally auditors put with respect to inventory accounting?
Yes, sir. Supposing in our case, typical say case, supposing we have not, for whatever reason, they have not shown us consumption in one system, we are carrying almost more than double of what actually we are reporting in the financial system. For some reason, if a management would like to smoothen their account, smoothen their uh, earnings, and
Mhm.
like to report higher numbers,
Mm.
auditors can and should qualify those numbers. In the past, not exactly in our hospital or our industry, in other industry, I have seen serious qualifications by auditors where they have felt that the numbers are not correctly reported.
Okay. So and you and as a CFO, do you take those qualifications seriously because of the business implications or because of the regulatory implications?
Both ways, sir. Because if auditors qualify, fortunately, we have no qualifications. Only thing is that our internal auditors insist that we should cleanse the account, because what we report to the outsiders is absolutely properly checked and all those things. So if there is a qualification, it reflects upon the management, which I am a part of. And then
Yeah.
yes, regulators also would then take a different view on us.
Okay, that's one. And the last question I would like to listen from you is about for a hospital, when a company like Kalinga or any other corporate hospital, when they approach a bank for either working capital loan or a term loan, will the banker get into the nitty-gritty of valuation of inventory?
Yes, sir. But they don't get much into if they trust the hospital. But yes, they do actually, because if we take a cash credit loan, then in that case we pledge our stock, they definitely ask us to give a stock statement after every month, and,
Uh,
and more proactive, which we do not see much in our banking industry. But a proactive banker, they would not only receive the stock statement and sleep over it, they would also analyze it. They should analyze what numbers we are reporting and whether that is in sync with our operations.
okay, so bankers also see that. That's quite comprehensive conversation we had with you. So, Mr. Sidharth, I just want to ask one question, which has nothing to do with inventory, but for a hospital industry, particularly a hospital like Kalinga, how big is the accounts department? How big is the finance department? What percentage of total employees of, how many people are working in a finance department or accounts department?
So finance department, exactly, though there are so many other people in billing are reporting to me, but exact core finance, I have only 5 accountants, sir.
Oh,
So
okay.
that is not even 1% of our headcount.
Okay, okay. That's wonderful. That's great. So if I can summarize, I could see that as per your conversation, inventory accounting plays a big role in the operations of hospital industry, despite the fact that a very small percentage of total assets are in the form of inventory, but inventory has a big implications on the operations, and it affects the bottom line as well as the top line of the firm. And you meticulously follow the accounting standards and the methods of valuations and the process of verification. And you also take very seriously the auditor's qualification. So in the process, you've conveyed to us that inventory management, inventory valuation, and inventory verification, all three aspects of inventory play a very important role in healthcare sector. Did I get you correctly?
Absolutely, very correctly stated, sir.
Wonderful. That's great talking to you, Sidharth. We will continue our conversation some other time, as you rightly mentioned about, other assets, what are the other assets. But in this conversation, our focus was only inventory. We thank you very much. Have a good day.
Thank you, sir. Have a good day.